Welcome to my presentation, Property Valuation for Beginners, Part 6. In fact, there have been a time gap between the Part 5 presented earlier and this Part 6. So as to get a continuity in the subject, I request all valuers to watch Part 5 first and then watch this Part 6. In the previous chapter, Property Valuation of Beginners, Part 5, the first part, Income Approach under the International Valuation Standards, 2017, has been fully explained. Now in this chapter, the other two approaches, Market Approach and Cost Approach, have been explained in detail with many examples for easy learning for the beginners in valuation profession. And this is most useful for the IBB examination for registered valuers. Now the market approach. In the market approach, we compare the subject property under valuation with the transactions of a similar property in the market and come to a reasonable conclusion as regards how much the property is worth or how much to pay for the property. This procedure of valuation is governed by the economic rule of substitution, which tells that nobody will pay more than the price at which the substitute is available. Valuation methods. The methods used under the market approach are called the sales comparison or capital comparison method. The methods followed under market approach are divided into the following steps. In the sales comparison method, the parameters of the comparable properties are analyzed as shown below. 1. To identify the comparables in the market and identify their key features influencing the market value. 2. To conduct a consistent analysis of the quantitative and the qualitative variations and similarities between the comparables and the subject property. 3. To prepare a value matrix for the subject property by making appropriate adjustments of each feature of each comparables following steps 1 and 2 above. 4. Come to a final conclusion on the value of the subject property after recognition of effects on the valuation reached. If you have a more elaborate explanation on this, the item number 2, to conduct a consistent analysis of the quantitative and qualitative variations and similarities between the comparables and the subject property. That is, compare the specifications, the quality of the specification and the quantity of the specification. By quality we mean, suppose it is with mosaic flooring and the comparable property is with vitrified tiles, or the wood used for the joineries are teak wood, and for the comparable property it is with ordinary hardwood. Such variations. Then regarding the quantitative analysis, the area of the property, the area of the building, it may vary. In one property, the area will be very small, and in the comparable property, the area will be very high when compared to the smaller value. Then to prepare a value matrix, because you compare the quantitative, qualitative analysis and compare this and make a value matrix between the two properties. Then we come to the conclusion on regarding the comparable or sales comparison of the two properties under consideration. The principal exercise that is to be done by a valuer in following the steps above is in respect of the differences that exist between the identified comparables and the subject property. In fact, the difference may be innumerable given the inherent characteristics of the real estate elements and properties in the market. See, in practice, if you have a practical approach, it is not very easy for the valuer to compare all the innumerable properties between the two comparables. We can select only a few properties which affect the value. The valuers present a description of the majority features that contribute to the various properties influencing the value and necessitating some adjustment in achieving a valuation. Important real estate features which affect the value. 1. Internal physical features. A. Land. The features that affect mostly is shape of land, road frontage, plot depth, topography, drainage, whether the property is susceptible to flooding, soil conditions of the property, and the orientation. B. The structure, that is the building in the property. The main features that affect are the structural design, internal planning, the specifications of the building, the floor areas, number of bathrooms, proportion of garage, age of the building, and the parking facilities available. Analyze the internal features of the property. Now we will go to the analysis of the external features, and most important is the location. Now the properties itself can be divided in two or three: the residential properties, commercial properties, and industrial properties. First, the residential properties. The main features that affect are the population of the district, characteristics of the surrounding property, presence of civic amenities like shopping center, school, public transport system, open space for recreation, playgrounds, parks, cultural centers, places of worship like temples, church, mosque, hospitals or primary health centers, law and order situation in the area, cost of municipal services. Then the prohibited industries, graveyards, crematoriums, slaughterhouses, slums, railway tracks, etc. have a detrimental negative. We have discussed about residential properties. Now we will discuss about the commercial properties. Under commercial properties, there are two categories: office property and then retail shops. In the case of office property, the main features that is considered in a traditional city site on the view of the employees and clients, whether it is for large offices or for small offices located in the shopping streets or in the suburbs of large cities. Then such offices which are frequently visited by public nearer to retail centers or out of town locality with large offices and large open spaces. If it is the head office, motorable road, abundant parking facilities, security of neighborhood, internet, wireless connectivity of good range of speed availability of gym, coffee shops, courier service, public transport system are the main concern. Retail shops. In the case of retail shops, the following features are relevant. Position in the large cities, position in secondary cities, position of residential neighborhood. The importance of shopping street, kind of crowd passing through the concerned shopping street, the individual capacity of the shopping people regarding the volume of purchase they make and their spending powers. Next, the position of the shopping mall within a group, proximity to multiple shop branches, facilities for road crossing, availability to more parking facilities, etc. Thirdly, the industrial real estate. The main features affecting the industrial real estate are location of primary industry close to the availability of the raw materials, location of manufacturing units of items related to the primary industry as well as associated industries, proximity for marketing the finished goods. If it is an IT industry, the availability of talented, educated manpower in the location. B. Restrictions and building regulations. Building bylaws, environment control, zoning on usage and density have enormous effect on the value of the real estate. C. Rights and liabilities. The rights for different properties are entirely different according to the merits of each type of property. The bundle of rights in a freehold, leasehold, and lifehold properties vary very much, and consequently, this affects the value of the real estate. Also, the properties owned by a trust or a timeshare properties also rights that cause a variation in the value of the real estate property. 3. Statutory rights. Rent Control Act, Town Planning Acts, Easement Rights Acts, etc. may also influence the value of the real estate. A. Disposal Acts. Advance payment, cash down payments, staggered payments, payment in check are also factors affecting the value of the real estate and also the date of disposal. Examples of valuation under sales comparison method. An apartment facing the main road with an area of 120 square meter in the first floor of a residential block constructed about 20 years back. At about 300 meters from the apartment block, a transportation center and a shopping complex are situated. Another residential apartment of 75 square meter in a different housing block in the same road is situated at a distance of 500 meters away from the transportation center and shopping complex referred above. The apartment very much superior in specification when compared to the one mentioned first and is situated in a building block which is only 5 years old. The latter apartment was sold 6 months back for an amount of rupees 45,000 square meter. Find out the market value of the 20-year-old apartment. Assumptions made in the valuation. It is taken into consideration that the later apartment of 75 square meter is in conformity with all conditions of market value. So as to apply the sales comparison method, considering the location, size, specification, age of the building, and transaction time aspect of the sale, we have to allow the undermentioned additions and deductions on the price of the comparable, namely the second apartment in the above example. To estimate the market value of the subject apartment, the first mentioned apartment. 1. Plus 15% due to the location of the subject apartment being in close proximity to the transportation center and shopping complex. Minus 5% due to the larger size of the subject apartment, 120 square meter as against 75 square meter. 3. Minus 15% due to the subject asset, the first mentioned apartment is of inferior specifications when compared to the comparable apartment mentioned second. 4. Minus 10% due to the subject apartment being older, which is 20 years old, than the comparable apartment, which is 5 years old. 5. Plus 12% due to the subject apartment being valued at 6 months after the sale of the comparable property. Increase in value at 2% per month. So overall addition and deduction will work out to plus 27 minus 30 is equal to minus 3 overall deduction. Hence, the market value of the subject property is equal to 45,000 per square meter into 120 square meter into 0.97 is equal to rupees 53 lakhs 38,000. The above example, which we have analyzed, is a typical case to market approach with sales comparison method. In a broader outlook, the valuer should consider the following situation when adopting sales comparison method for valuation under market approach. Market approach to value the property is most important and widely used. This approach is most favored also. There are mainly 5 methods to value the property under market approach. A. Belting theory of land valuation. B. Hypothetical plotting scheme method of land valuation. C. Front foot rule method of land valuation. D. Sales comparison method. Direct market. There are other methods followed for valuation. They are ad hoc comparison technique, hedonic pricing method. Secondly, adjustment grid model. Third, price quality regression technique. Fourth, weightage score system. E. Development method, residual technique. This method is also termed as indirect comparison method or abstractive method. Actual sales basis owner occupied. Secondly, actual sales basis tenant occupied. Hypothetical building scheme method owner concept. Hypothetical building scheme method income concept. It is seen that out of the above mentioned methods, the most widely used method is sales comparison method. It is based on principles of comparing different properties and substitution. In this principle of comparison, one important concept is to be studied. The concept is that similar looking properties may or may not have same value. Sometimes the similarity is deceptive. It is seen that two plots of two buildings looking similar will have quite different characteristics and different values. The important aspect should be analyzed thoroughly, and the valuer should take immense care to verify the difference between the two properties taken for comparison which look alike. There exists different types of market conditions in real estate market. Just as any other commodity in a market, there are three types of market conditions in real estate market. A. Buyer's market. B. Seller's market. C. Stable market. Other factors affecting the market value of a property are: 1. Demand and supply of properties. This is the most important one. 2. Income yielding capacity of the property. 3. How the state and central government land development policy affect the property. 4. Taxation policy of government, state as well as central. 5. Income and wage level purchasing power of residents in the locality. 6. Money market situation. 7. The boom and recession in real estate market. 8. Expected rental yields and return on investment in real estate maintenance. 9. Maintainability of high rent. 10. Inflation and recession in national economy. 11. Availability of loan from banks or financial institutions and the rate of interest for these loans. 12. Liability of property tax and cost of maintenance. 13. Availability of alternate or substitute assets in the market. 4. Employment opportunities in the area. Physical or technical factors, land characters, size, shape, plot area, frontage, orientation, topography, accessibility, and soil conditions. Infrastructure facility, good network of roads, water supply, drainage system, uninterrupted power supply, and proper telecommunication networks. Prominence, located in a main road or byline or dead-end road or in a remote area. Technical details of buildings, RCC frame or steel frame or load-bearing structure. Age and future life of the building. Present condition and percentage deterioration. Obsolescence due to change in technology or change in lifestyle. Maintenance, repair, and tax liability. It will be more easy to learn the sales comparison method by analyzing case studies. Case 1. An industrial unit of 750 square meter area in the ground floor of a building was sold for rupees 25,000 per square meter. Find out the fair value of 150 square meter industrial unit in the first floor of the same building. Consider location and size factor for showroom in the two cases. In a building for the purpose of accommodating an industrial unit, the first floor is a disadvantage. Due to this disadvantage, the industrial unit in the first floor will fetch a lower rate when compared to the ground floor rate. The premises of smaller size may or may not be disadvantage of the same located in the upper floors. Suppose a 10% negative weightage is considered, the adjusted rate will be 25,000 minus 10% of 25,000 is equal to 25,000 minus 2,500 is equal to 22,500 per square meter. Hence, the rate of 22,500 per square meter can be considered for the industrial unit. Case 2. A residential flat, 80 square meter area in a building of 12 years old is sold at rupees 22,000 per square meter in July 2012. This building is on the main road and it has a beautiful garden and parking facilities in the plot. In your opinion, what is the fair price? In August 2013, for a flat of 60 square meter area situated in a nearby line in a building of about 30 years old and having inferior specifications when compared to the flat in main road. Here, the valuer has to consider the age of the building, location of the property, and more important, the time factor. The rate of sales of the flat for August 2013 with necessary adjustments can be taken as plus 10% for 12 months difference August 2013 to July 12, which is due to the time factor and increase in price factor. Minus 8% for 15 years age and inferior specifications. Minus 10% for reduction due to flat located in a byline. Minus 3% for reduction in area of flat from 80 square meter to 60 square meter. Hence, overall percentage reduction is assessed as 11%. Hence, the rate of 0.89 into rupees 22,000 is equal to 19,580 per square meter is estimated for the flat. Hence, the fair value of the flat in question is 60 square meter into 19,580 is equal to rupees 11 lakhs 74,800. Please note the experience and fair knowledge of the valuer in assessment of rate and different factors affecting the price is very, very important. With this case 2, the part 6 is being concluded. More examples on valuation under sales comparison methods have been included in the part 7 to be uploaded very soon. I extend my courtesy and gratitude to Sri R.K. Gandhi, Sri Shyamal Datta, and Sri B. Kanaka Sabapathy for certain extracts taken from the book on valuation. Hope the presentation is helpful to you all. Please express your frank opinion, your likes and dislikes about this presentation. Also, I request you to subscribe my channel. Thanking you.